Hey everyone, in this video I'm going to look at CrowdStrike stock and answer where I think it could be by the end of this year. I'm going to look at a few financial estimates and assumptions to come up with the conclusion on where I think the price could be. I'm going to share with you precisely where I'm getting all of these numbers from so you can see for yourself and come to your own conclusion whether or not you think my forecast is on point, too optimistic or too pessimistic. So without further ado, let's jump right in and let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so one of the numbers I'm going to need is CrowdStrike's current stock price. Right now it's at $329 per share. You can see it's had a nice run upward since bottoming out January of 2023 at around $100 per share. It's more than tripled since then. I'm also going to need CrowdStrike's current price to earnings ratio. Right now it's trading at a forward PE of 67.15, and you can see it's on the higher end of this estimate of this price over the last year. I'm also going to need CrowdStrike's EPS estimate for the next year, and you could see here the next year for CrowdStrike it says 2026, but for CrowdStrike that's their fiscal year 2026. For ordinary people, that's calendar year 2025. Companies are allowed to have fiscal years that are different than calendar years, which causes a lot of confusion, but still they are allowed to do that. It's according to US generally accepted accounting principles. They are allowed to have this different fiscal year. Nevertheless, for us, we're going to look at that as the next year, 2025. And when we're using the forward price to earnings metric, we're going to need the earnings per share for the next year. So we're going to get this $4.89 figure. Interestingly, this estimate has been increasing over the last 3 months. You can see it was $4.64 90 days ago, up to $4.72 60 days ago, then $4.76, and then finally $4.89 7 days ago. So analysts keep upgrading where they think CrowdStrike's earnings per share is going to come in next year. And these are a collection of Wall Street analysts that are following CrowdStrike stock. They submit their forecast for where they think its earnings per share will be. And this is the consensus collection of those estimates. Now, keep in mind, nobody knows for certain what's going to happen in the future. This is an estimate. This is an assumption, but I'm showing you where I'm getting that assumption from. And so you can come to your own conclusion whether or not this assumption is too high or too low, or if it's on point. All right, so now that we have the numbers, we can go ahead and plug them in and come up with the stock price prediction for CrowdStrike stock by the end of the year. So the earnings per share for 2025, remember I showed you I got that from the Yahoo Finance consensus estimate among Wall Street analysts, $4.89, and the forward price to earnings ratio of 67.15, which is the current multiple the stock is trading at. If all else remains the same, the stock price could end the year at $328 per share, and you can see it's trading at $329 per share. So if nothing else changes, then CrowdStrike stock is expected to remain flat for the rest of the year, which is clearly a disappointing return on investment. You're not risking your money just so that it could stay where it's at all year long. You want a sufficient return on investment for taking the risk in investing in stocks, and that wouldn't be it. So in order for investors to make money on CrowdStrike stock, one of these two things needs to improve. Either its price to earnings ratio needs to be updated or upgraded in order for CrowdStrike stock investors to make a significant return on investment or a meaningful return on investment. And according to my prediction, according to my estimate, if I was to choose one of these two, I would say the earnings per share has a greater likelihood of increasing than the forward price to earnings because the forward PE is already elevated. This is more than 3 times the average of an S&P 500 stock. So it's already trading at a premium valuation. So if I was to guess which one would increase for the rest of the year, it would have to be the earnings per share. But what if the forward PE were to decline to 50 and the EPS were to stay the same? Then the stock price could fall significantly to $244 per share. At a PE of 45, the stock price could be $220, And at a PE of 35, the stock price could be 171. So you could see why. And let me remind you, I do not have CrowdStrike stock rated as a buy. I updated this recommendation to a hold since the company released its earnings a few weeks ago. So that's my recently updated prediction or recommendation for CrowdStrike stock is a hold because the valuation is too expensive for me to recommend as a buy. And you can see why that's the case, right? If the valuation stays the same, the stock price remains flat. So in order for the stock price to increase, the valuation needs to improve to something like 80 or 75. At 75, the stock would return something like 10% on the year, which would be a reasonable return on investment for CrowdStrike stock from 328 to 366. That would be reasonable. That would be, I would say, adequate. I wouldn't be thrilled with that return because getting roughly 10% on a stock of this risk profile is not great, right? When you can get over 5% return on investment investing in a super safe government bond, when you're going into a risky growth stock like CrowdStrike, you want to get a sufficiently higher rate of return and an increase of 5% for taking on that gap, that increase of risk. I don't think is that great, but I also don't think is really bad. So it's just adequate. I would just be indifferent with that rate of return if I was to invest in CrowdStrike stock. So where do I think the stock price ends up at the end of the year? I think it ends up somewhere between these two, somewhere between 328 and 366 would be my best case. Not my best case, I keep saying best case, but my most probable outcome for CrowdStrike stock is something in that range. And I think instead of the forward PE increasing, I think it's going to come as a result of an increase in the earnings per share estimate rather than an increase in the forward PE. So that's where I think the difference is going to be in terms of where the stock is expected to go by the end of this year and where it actually ends up by the end of this year is going to be a difference in an increase in the EPS estimate. So I'm curious to hear what you all think of this estimate because I've been getting some flack lately that my estimates are too conservative, that I don't think these stock prices are going to increase by all that much. And it's partly because these valuations are stretched. When I see these stretched valuations, I don't see very much room higher. And so that's why these forecasts may appear to be conservative, but I'm not trying to be conservative. I'm giving my most probable outcome. I'm not trying to be safe and be conservative, but I'm just giving my most probable outcome based on the numbers that I'm seeing here. As I've said before, I don't like when analysts or Wall Street CEOs try to be conservative with their guidance, right? I don't try to do that. I just give you my most probable outcome. And if it seems like it's too conservative, it's because the valuations are stretched for some of these growth stocks that I've been covering. So I'm curious to hear what you think in the comments down below. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.